Timing of effective payments. It's one thing to figure out what to do. It's another thing to figure out when to do it. We'll look at long time periods and short little weeklies. Well, yearly around April 15th, tax time. Don't want a big refund. In fact, you maybe actually can wind up owing up to $500 without a penalty. Pay that property tax early, with a year prior. That's always a good idea. Currently, if you're over 73, you've got to start taking money out of your traditional IRA and pensions if no longer working. It starts small and grows. It's a good idea to do it early in the year. On the other hand, you might be putting monies into your IRA accounts. That's always a good idea early in the year. Current limit is $7,500 for the youngins, and both the Roth and the traditional give you the same return if you have the rates going in and out being the same. You actually get a benefit if you put some qualified dividends into your cash account, saving 9%. A good tip is take your age as a percent, put those in safe securities. A little trick there is you can use target dated funds and they'll arrange the longevity dates for you. By the way, here are the states that have a high income tax and those that have a low income tax. It's especially the case if you move to a low income tax state. You might want the traditional IRA. Twice a year you probably have to deal with insurance. Way to figure that out is take the difference in the deductibles divided by the difference in the premiums. Here's an example. You got a deductible of $1,000, payment of $200, but a deductible of $100 with a payment of $500. Notice we flip the signs. The answer is 3 years, and if you go longer, you'd be better with high deductible, low premium. You'll get Social Security payments on the second, third, and fourth Wednesday if you're born in the first, second, or third of the month. Notwithstanding those self-appointed gurus, I would take it at the age of 67. Get a better return in the stock market. Better to use it while you're still able, and addresses your viability concerns. By the way, it's based upon the last 10 years, so that applies to you sports and actors. For middle bracket payers, 85% it is federally taxed and is taxed in the following 12 states. Moving on to bills, you might consider paying them about 10 days in advance. Use no-fee credit cards for purchases, likewise for debit cards. Don't fret about those mileage points. You get a better return, especially if you have a card that doesn't even charge a foreign exchange rate fee. And prioritize payments for both loans and investments together on an after-tax return. For your weekly shopping, you might allocate an hour for every $2,000 a purchase, $30 per minute. And grocery stores sometimes on Fridays will offer 4 times points. That can save you about 10%. And then there's something called the economic order quantity. You can use it for your ATM and even your big old dog. Here's an example for you. I'll let you read it. Dr. C Invests.